Hello, my name is Steve Bigelow with the Candlestick Forum. We have a very interesting analysis that had been discussed quite a bit in our chat room today. When we woke up this morning, the markets headed up higher. But our morning comments said, be careful, because number one, if it opens here and closes here, it's not a reversal signal. Now, if it closed below where it opened the previous day, that would be a bullish harami. If it closed above the open of the previous day after opening positive, that's not a signal. Why is that? Have no idea. But remember, the Japanese rice traders have spent centuries analyzing that if it opens here and does a positive trading day, it's not necessarily a reversal signal. But the other factor that was most evident is that we're still below the T line. Stochastics were still heading down. So while was our warning to not be ready to jump out of short positions or start going long? Because of those two factors. We're still below the T line and stochastics were still heading lower. This also was illustrated over here in the NASDAQ. That it traded up most of the day, but we still did not have a reversal signal or even a positive trading day before the end of the day. The assumption still remains that we're in a downtrend until we see a buy signal and a close above the T line. That still illustrates the fact that we shorted Oracle yesterday. You can see the bearish J-hook pattern. A little bit disconcerting when it was trading positive most of the day. But the reason we didn't cover short positions was the same scenario. We hadn't had a buy signal, and the assumption was wave one, wave two, wave three. Again, this is not rocket science. As long as you're trading below the T line, the assumption is that you're trading in a downtrend. Same scenario on the bullish side. We recommended MGI today because of the fry pan bottom bobble breakout. Notice how the T line was acting as support. When it opened positive, we could see that it was a fry pan bottom breakout, but what was everybody else watching? They were watching the fact that it got through the 200. That's telling them it's time to buy. We were already buying immediately because we knew the probabilities based upon this pattern setup was that we were heading higher. We can use that same analysis when we recommended going short on PRPL with a bearish left-right combo failure at the 200 and a close below the T line. Very simple assumption. We're in a downtrend until we see a buy signal and preferably a close back up above the T line. That makes the analysis, everybody can say, well, yeah, you saw that there, but, and you were looking at hindsight. No, the analysis is if this is setting up, telling you they failed, this is why we're looking for sell signals at the other appropriate places. We recommended shorting Southwest Airlines, but it did open positive and traded positive, so it didn't execute. However, you can see what the investor sentiment is still revealing. If this opens lower tomorrow, we've probably got the downtrend starting. Now, you can confirm whether that's a viable trade by simply looking at 4 or 5 other airlines, Delta, United, Alaska Air, see what they're doing. If they're all doing the same thing, yeah, that tells you they're selling off that sector with great enthusiasm. There was our sell signal on Apple. Why would it still be a viable short? because notice what happened at the level everybody was watching to see if it was going to support. They didn't. That means that more than likely you still got more downside. Anytime you can see a signal that it gives you a power trade, our recommendation to short on AZEK was based upon the fact that you had a shooting star doji, best friend gap down, failure at the T line, and they didn't support at the 50 and they didn't support at the 200. If it opened lower the next day, what was it telling you? Bearish J-hook pattern in progress. And where do you want to find these signals? When you're scanning when the overall market trend is heading lower. We're looking for the power signals. Tomorrow, we'll be shorting Lucid based upon the Dagwood signal, an evening star signal followed by a doji sandwich. In this case, the doji sandwich was even more powerful with the very bearish trend kicker. But notice what happened when they tried to take it up today. They eventually failed. And where do you think our next target is going to be? Wave 1, wave 2, going into wave 3. I think the 200-day moving average is way down here. That would be your next likely target. So everything that you view in a candlestick chart is telling you exactly what's going on in investor sentiment based upon the signals and the T line. And it also not only tells you when to get into trades, but it tells you where your logical profit taking or stop losses should be. We recommended AGS the other day when it broke out with a left-right combo gap up through the 50. Where was the next likely target? The 200-day moving average. It opened and was trading positive today. When people in the chat room were asking where should we put our stop, the logic says you put your stop right at where it opened. Because if you just break down what a candlestick signal is, it's telling you where the bulls and the bears are trading. So if it opened here and traded up here, you've got a green candle. That's telling you the bulls are in control. But if it comes back down through the open, now who's in control? The bears are in control. That's where you put your safety stop. Because if you came back down through there in the overbought condition, that's after gapping up, that's a good place to tell you the bull or the bears are starting to take control, number one. Number two, look where they did it. Right here at a level that everybody else was watching. So right now, you use that same analysis to say, we're in a downtrend. We're below the T line, just a simple T line assumption. We want to stay short until we see a reversal signal. That'll be it. Join us tonight. We've got a guest speaker showing you how to use selling credit spreads successfully in a downward market. That'll be it. We'll see you in the chat rooms.